I must say that the beginning of 2022 has been quite turmoil in the markets. Here is my dividend and growth investing portfolio. This January, February alone, the portfolio is down roughly about $7,000. The last time I did this dividend update, the portfolio was down about $12,000. It's recovered a little bit, but right now we are still down almost $8,000 with this portfolio. Now, this is my dividend and growth investing portfolio. This is how the portfolio has performed over a long period of time. And when I mean by a long period of time, it means about coming up 2 years. In May, it's gonna be 3 years that I've been running this portfolio, and this has been the performance of the portfolio in the past 3 years. So before we get into some of the performance of the portfolio, I want to go over a few things with the markets. I want to touch up on the S&P 500. This is how it's been looking for the past 3 months as well. So it's really been a hit or miss if you are an investor really in the stock market in 2022 so far. But I believe that in February, March, going towards the end of the first quarter of this year, I think majority of the market is going to bounce back and we're going to see positive returns. In the meantime, there's endless of news on YouTube about the market crash. Market is going to crash. But for me, I would like to be the guy that is optimistic on the US stock market. Over the long term, the US stock market has always done really well for most of its investors. So I'm still bullish on the US stock market over the long term. Now, let me quickly run through the portfolio here. I have a few things that I'm going to touch upon, so stay tuned. We're going to be touching up on some professionals as well, what they're saying on the market with CNBC later. Just want to run through the portfolio really quickly, talk about things that I've been doing, how I've been managing this portfolio. Now, I run a dividend and growth investing portfolio, and it's sectioned off into multiple segments. And I have most of the money going into the passive income section here, which is the main part of the portfolio. This is the part that earns the most money. And I also have my money in some ETFs, Berkshire Hathaway, some more ETFs, a little bit of crypto that I'm investing in here. And then I have ARK. I just recently sold out of ARK. Basically, I'm going to buy back into it when the stock drop. I think over the year, just because the inflation and the Fed raising rates is going to affect most of the companies that ARK is investing in. So I think it would be a good idea to sell out of those now and hopefully be able to buy back in at a cheaper price. So that is exactly what I did. Crypto has been quite volatile. And as you guys may know, I have a couple of different crypto companies that I'm investing in. I got Coinbase. Most of the big guys that hold crypto on their balance sheet and companies that are so entrenched in dealing with crypto, I have some of that. But that is a very volatile thing. Over time, maybe over a 10, 20-year period, I think the crypto portfolio will actually do very, very well, because whether anybody likes it or not, crypto is here to stay. So I think this side of the portfolio will do well over time. But for the most part, the goal of the portfolio is to earn dividend. That is the one thing that I built this portfolio for. Over time, I want this to be another arm, another entity that is working for me and is making me money. Now, let's break that down right now for you guys. So today, I didn't make any money today. Pretty empty. No checks today. So if you look at the past week, I was able to earn $10, almost $11 here. And if you look at the past month, we earned $25 in the past month. And in the past 3 quarters, so in the past 3 months, we earned $300. So that is averaging about $100 in the past 3 months. And in the past year, the portfolio earned $739, almost $740. Now, that is quite significant. Like almost a $800 check in 1 year. So maybe in this year, 2022, That could be maybe 850 check, another 850 check in 22. Then I'm also adding more money in here. So it would be so interesting to see how the compounding would actually work in real life. Like, I'm so excited to share this journey with you guys. So stay tuned. I hope you're subscribed to the channel. So let's take a look at the all-time. The portfolio has earned $1,000, almost $1,140 here. The only thing that I can control when it comes to this portfolio, like I always say every time, I can only control the amount of money that I put in. Okay, that's the only thing I can control. I can control the amount of money that I put in the portfolio, and the growth of the portfolio is out of my control. You know, the only thing that I can do is that, okay, I can research all the companies that I want to research. I want to research them, make sure they're good companies that I don't mind owning for a long period of time, and at the same time make sure they are in very well diverse pieces of companies. Like, I have companies, energy and transportation. I have, consumer, I have finance, real estate, healthcare, utilities. So everything is broken down into industries. And, if we go into like healthcare, for example, I have all the big companies in healthcare. Johnson & Johnson, they make a lot of different products. United Health, they're basically a big insurance company, health insurance company. Pfizer, we know what they do. Quest Diagnostics, they are a lab company. They do lab testing. So a lot of these companies, they're going to be here for a long period of time. They're arguably monopolies on their own. So I think they're going to be here for a long time. That's what I do. I pull my money. I buy companies that I know they're going to be here for a long time, and I put my money in them. And when you buy a piece of company, you're buying into their business, you buy into their balance sheet. So if they pay their investors, you as the investor are also eligible to get a piece of that money. So now for the most part, my goal is just to, trying to work as much as possible, make as much money as I possibly can, and trying to invest it into companies. I believe that they are undervalued today, and in the future they're gonna pay me a lot. They're gonna pay me with dividend, and at the same time the stock could potentially go up. So that is the plan with the portfolio here. And what I do with this particular portfolio, at least I show it twice to three times per month. I'm into other things. Check out my channel, see what I'm about. I'm into other things, so I show other things as well. But like, for the most part, the focus of the channel is to get this portfolio up to $1 million. That is the main focus of the portfolio. So the other thing I also want to touch upon is just the general market. Like, if we take a look at the Dow is down 2% this year. S&P is down 4%. NASDAQ is down 9%. This is where most of the tech companies are listed. Russell, the smaller companies, is also down, almost 9% here. Like, this year, 2022, has been quite tough. And I think a few time like February, March, I think will be good, because I don't think there's a likelihood that the Fed will raise rates during those times, even though they have their meetings. And the job reports has been quite good as well. Like, we've had really, really good job reports. Everything has been really, really nice with that. So if you take a quick look here at the job report, the unemployment rate is currently at 4%. In January had a very good month. We had 467,000 jobs in January, which is good. A decent amount of people are working. 78% of prime working age people are working, so which is a good thing. I'm gonna leave a link to this in the description. They're going to a lot of details as to what's going on in the economy, the employment information and everything like that, which sector is getting a lot of employment, which one is losing. It goes into more details, and as you go through this, it will give you a little bit more confidence into the economy per se, and as the fact that even though the market has been quite, has been hammered in the past, couple of months here, I think with the US job report strong in January, I think there's a chance that will keep on going strong. Now, there's still a labor shortage in a lot of industries. If we take a quick look at the industries that are losing and gaining, you can see hospitality is losing a lot of people, government, education. So these are a lot of places where COVID has basically hit them pretty hard. So, it's going to take time for them to recover. We know that. But there's a lot of things that the Fed has to do as well. To be honest, I wish the Federal Reserve would just come out and raise all the rates at once, even though it's going to hurt the market a lot. But let them raise it. Let's get it out of the way and keep it pushing, so there's no uncertainty in the stock market. So what we're going to do now is we're going to take a quick look at what the mainstream media, just this guy, Tom Lee, he's a pretty good analyst. And let me share with you what he had to say on CNBC. I feel like he makes some pretty good points, and I agree with him with some of the points that he's making here.
Yeah, I mean, first of all, I heard all the comments all the other guests made, and I agree. This is a pretty treacherous period for markets, but I'm still going to lean into this weakness. And the reason we think it makes sense to is, one, I think the jobs report is validating that the underlying economy still remains pretty strong.
Like I just showed you guys a minute ago, the job reports was pretty nice. Like soon to be 80% of workers will be working. The unemployment rate is at 4%. I think the lowest that we've ever had is like 2% or something like that. And mind you, this is during the period of Omicron, so the U.S. market the U.S. economy is doing a lot better than most people are thinking. And because of what the Fed is trying to do, that is what's spoken the market a lot. But I mean, the Fed will do what they need to do to keep inflation down, because their job is to promote employment and price stability. So they did employment. Employment has been good so far. Now they have to tackle price stability, which most of the time, most people don't have, any power to change that anyways.
And with the move in rates, and while that's alarming, we still have negative real interest rates. And then we know investors have essentially panicked because they raised a lot of cash.
A lot of people sold. Even my favorite YouTuber, he sold a lot. He sold a lot of stock, $20 million worth of stock. A lot of people sold, but we'll see. We'll see what will happen
in the first 8 weeks of this year. And on top of that, sentiment has collapsed, and I think a seismic hit like Facebook even added to that misery. So the cues I'm sort of looking at, and the reason we're staying bullish is, the VIX term structure is actually normalizing, which means it's a risk-on signal. And I'm kind of encouraged by the rally in oil because that is a sign of underlying health of the economy. That
is also true, because think about it, oil. If the oil prices are going up, okay, there's a lot of things that's making the oil price go up as well. The beef in Ukraine and all this stuff that's making the oil prices go up. But in general, I'm out on the street all the time. The road is buzzing. People are going to work. People are coming from work. People are going shopping. People are doing their business. People are not really worried about inflation or anything like that. So the economy is pretty strong. Is stronger than what most people are anticipating.
And I think on a risk-on, one of the cues that we should be focusing on is the fact that Bitcoin's back above 40,000. So we're still going to tilt towards February. Is going to end up being a rally month.
I agree that February will be a great month, guys. I completely agree. February is going to be a hell of a month. Yeah, I agree. February is going to be a good month. I feel like for the most part, it's hard to see your portfolio go down. In times like this, it's hard to see your portfolio go down and down and down and down and down. But for the most part, you're buying really, really good companies that are extremely productive in the world. companies that are doing, a lot of good things. Google is not going anywhere. They're going to get bigger. TSMC is going to get bigger. Microsoft is going to get bigger. Apple is going to get bigger. A lot of these companies, they are going to get bigger over time. They're going to be bigger than what they are now 20 years from now. So I still just keep on buying and just stay focused and just keep on doing my thing. That is the most thing you can do. Like I said previously, the only thing you can control is how much money you contribute. Now, for me, I have a basic amount of money that I look to put into the portfolio pretty much every day. And once I hit that threshold, I just like, okay, what's the market doing? Is the market down? If the market is down, then I start buying more of my favorite companies that I want to own a little bit more of. Look at the price, the PE of the stock. If it's low, then jump on it and grab a little bit more of that stock. Anyways, that's pretty much it for today. If you enjoyed today's video, please support the channel by giving the channel a sub. I do this pretty much every week. I post videos on a regular basis on this channel, and I post videos based on the things that I'm doing and how my investment is going. This channel is just focused on just my investments and things that I'm doing with my investments. So if you want to, stick around, watch, and follow me, I would appreciate a sub. And if you appreciate what I'm doing here on this channel, please give this video a like so YouTube can share the video with other people and promote it as well. So thank you. Appreciate you for that. So with that being said, until next time, see you later. Love you all. Bye.